You?
Hey, what's up?
Not much. Just messing around with some things, doing a little cleaning. I just
By the
just
way,
figured we might.
I'm streaming. By the way, now.
Oh, sorry.
No, you can still talk. I just want to let you know that it's being recorded.
To a YouTube channel?
Yeah. Mm-hmm. It's
Mm-hmm.
FOMC, so I'm going to stream it. So what's up with you? How's your week?
Been all right. I had a pretty good day trading yesterday.
Yeah, it was
2600.
a big move yesterday.
Yeah, 2600. I had trouble on Monday. I just felt like there was too much chop. I missed the good moves. Still came away with 600, but
Points?
dollars.
Oh,
It was a low day. I mean, hey, it wasn't red, right? It was
well, I
orange.
mean, I just like to think about things in points because I mean the number value is all relative, right?
I scalp.
Got it.
I'm in. I'm in. I'm out. I get my stops chasing.
Mm-hmm. What do you think this FOMC is going to be? Do you think they're going to be on the
I I
nose with
don't
what the
think I
predictions
don't
are?
think I don't think the announcement really matters. I think they're going to announce the 50, and everybody is prepared for the 50 and has been pricing it in already.
Mm-hmm. Yeah, I mean
So,
that's definitely what it is. But usually you get some kind of a volatility, and that's what I'm here to trade. I'm here to try to
well,
get the movement that comes from it. So,
I'm worried about it does what it did the one time where it just kind of went up and down, and it just kind of went sideways real quick for the rest of the day.
mm-hmm.
Um, but just in case, I did buy some calls for tomorrow
Oh, some
on
like
the spot.
1 DT.
Yeah, so they were pretty cheap. I couldn't resist that run up the other day. I just feel like it was a start, and then it dropped to fill that in, and then yeah, I think it's going to go up. I'll be surprised if it goes down, but I think the market's coming down anyway. So
What makes you think that?
nothing. I just don't see any good outlook for next year.
Why?
Every company's laying off employees. They're buying less stuff. Um, I could be wrong.
I think that the rumors of the end of the world are greatly exaggerated. That's what I always kind of default to.
Well, I
Is
didn't say the end of the world. We had this
well, it's just
conversation the other
FUD.
week,
It's
but I
FUD.
do I do think it's gonna come down and retest because of all that. But they say, like, when the times are good, that's when the comes down, the stock market drops from the peak into a recession. And the stock market, once it runs really high, it's because it's going positive out of a recession. So I think there's a pretty good chance that we drop real hard and then just shoot right back up.
What
So
if we hit the bottom in October?
it's a possibility too. It's a really good possibility because the way the market has been acting is as if we did hit the bottom in October.
Well,
And it could be all.
we got that really cool inversion that I like. Um, whenever we had the CPI print, let me bring it back up here. Actually, I'll stream my screen. Let me get that set up here for the Discord. All right. So on on this October the 13th, we had the CPI print that showed that instead of being 8.3, it was 8.2.
Mhm.
Tiny, tiny difference, right? And
Okay.
we got that false breakout right here. Hold on a second. I've got echo. Test, test,
What's the
test.
time?
Okay.
What's the
Um,
time frame here?
this is the daily. I'm using the S&P 500 futures, ES futures. That's what I use for analysis. But you can also see the um, the same setup happen on SPY. So on SPY, it's even cooler because one of the things that I look for is a 50% retracement level. And from the COVID low up to the all-time high, you had a pullback right there to some highs of the summer of 2020, and that 50% it just kissed it on October 13th, and it did what I call a spike, but you can call it a false breakout. It's basically a fake out to the downside, right? Kissed that
Uh,
level and it's rallied from there. And so that set up a really, really good bottom. I really like it when something like this happens because it fakes people out, gets everybody thinking one way, only to shoot up back the other. And it's a psychological trick. I mean, this is what I'm going to look for in the FOMC today. I'm going to look for price to shoot in one direction the minute before the announcement happens and then go the other direction. And I don't know if it's because it's a thin order book. I don't know if it's a fluke of human psychology. I know it's not technologically based. I know it's not algorithmically based because I've read books with interviews of like pit traders that will talk about the price of something before a news announcement swinging one way only to go way back the other. So this is a thing that happens in markets, and so often it creates a reversal that I pretty much base most of my trading around looking for these kind of things to happen. And so you had that happen on October the 13th, and so that signaled a bottom. Now, what's interesting to me, to your point about it going down, is we have now come back to the 50% retracement of that move from the all-time high, not on the SPY, but on the S&P 500, and that was what this week's announcement came up to. What was that news that we had this week? Yeah, on Tuesday the CPI came in, and because it was lower, that created a rally, and that came up and kissed the 50% level there. And so what you had was you had the 50% hit on the bottom, and then from the high down to that low, the 50% got kissed on Tuesday of this week. And so now you know where your key levels are for the long term. It's basically let's call it 350 SPY and 415 SPY, or 3,500 futures, 4,155 futures. So if for some reason this high that we made on Tuesday gets broken, I say we keep going up. It's very, very well defined, like this level. That being said, I'm kind of on the bear side with you, at least in the short term, because of how solidly it held it. Nasdaq did the same exact thing, except it was from the August high down to the October low, and then
yeah,
that.
on the SPY, I'm just worried about what can we do to get above the 430 level.
Well, I mean, if for some reason it was only 4.25% or something, I mean, yeah, that thing's going to blow. Like that's going to be a massive overreaction because everyone is betting on it to come in at the forecasted 4.5. But if they do a pivot, then it's going to be massive. Even though it probably won't be sustained, it'll just take everything by shock, and everybody's just going to buy. So that would basically be the condition that this thing rallies. But in both the ES and the Nasdaq, the fact that you had that kiss of the level, and then that daily bar come down and close back inside it, I gotta assume that that's bearish. So That we had a little bit of a rally overnight coming into this. I mean, being the contrarian that I am, I'm thinking that it's probably going to be a bearish move, and it's already starting to kind of creep up a little bit too. It's kind of interesting. It's like today we got a few minutes ago got a little hold of the support um, for today's rally. Actually, yeah, that's interesting. So again, like the reason I use 50% on every single time frame is, from this morning before the open up until this high that we made at 1142, price came back to on Nasdaq 11,922, and it works so much, man. I don't use any other Fibonacci's. I just look for that 50% level. I mean, the two things that I use are 50% levels and these spikes, these false breakouts. I mean, I really don't feel the need to use anything else, any other indicator. So, yeah, that's what I'm looking at. The contrarian in me wants to short it though, but it's really pushing up. Hey, Forex Nexus. Yeah, I see you. I see you there. Let me get my messages up. I had to look on the other screen. There you go. Okay. Gold. Yeah, let's take a look at gold going into this. Why gold? Why do you want to express the trade in gold? Do you like gold?
Who doesn't like gold?
I think it's kind of pretty. I don't really have any as an investment. I think
What is gold at right now?
Gold's at 1821.
Okay,
So
not bad. I got
it,
some
it
gold laying around.
it's I like trading gold. Hey man, I like trading S&P futures and Nasdaq futures. It's nice to have something where you understand the personality of it. You kind of get, has it Jesse Livermore said that stocks have a personality? Yeah, gold definitely, I'm sure, has personality. I don't follow enough. Waiting for Fed speech. Yeah, me too. That's what we're waiting on. That's why I'm doing the stream here. Is just because something's going to happen. Might be some opportunity. Hey Ryan, still waiting for 10K BTC. Me too. I mean, I'm interested for Bitcoin, which should also move based on the announcement today because it's interest rate driven. I've been talking for the last couple of weeks about how this being the Bitcoin chart on the daily. When we had the FTX news, the FTX down move right here, and it made a little second low right here, but then came up and captured a short-term 50% retracement. Like I call this a reaction, like a little reaction off the bottom. And so from about 16,158, this has been bullish, and you had to assume it's going to be bullish up until the 50% retracement of the move down, which is about 18,500. And it's interesting to look at the correlation between everything, where you have the S&P 500 is coming up to a little 50% level from the August to the October low, and Bitcoin is coming up to a 50% level of the November high down to the November low. And so this level is going to be really, really key if we hold it or break it. But I would not call Bitcoin bullish yet because not enough time has passed to get the momentum of this move up above that same level. So really need some solid price action above 18,500 for me to really call it bullish. But this news could be it. This has been a good little proof of concept here, where you have this little reaction off the low, and you let it hold the 50% level right there, and that lets you take it up. This can save people a lot of money trying to catch falling knives is just wait for a little bit of proof before you just try to buy something because it went down. Um, can save people a lot of money, and get you a really good trade, where you can, have a very, very tight risk below that past low. You could build a trade out of that, like this. Grab it there at the 50%. Just give yourself a stop below the low. Take it up to here and get you a nice 3-to-1. That's a good trade. That's a good trade. Been talking about that in my live stream last 2 weeks since it happened in November. And by the way, I do live streams every Friday, normally. So come join. You calling Joe to get his opinion in here?
Yeah.
What's he up to? I saw that he's been trading every day.
He has COVID.
Oh, he has COVID. Oh, well, I hope he gets better.
Yeah, he's been sick. I don't know what he's been doing.
Waiting for the World Cup to start. Somebody told me they were playing football, and I didn't see them wearing any pads, so I don't know what they were playing.
When is the finals of the World Cup?
When's the finals, William? And who's going to be in it?
Probably Argentina and France, I would say.
I've been watching the SPY cup and handle formation on the 30-minute as conviction for the FOMC. What are you convicted of?
Really? Let me check that out.
SPY. You'll have to educate me on cup and handle because, as I just said, I use very simple techniques, 50% retracement levels and false breakouts, spikes. All right. 13 minutes to go.
I'll tell you what, though, I do like the 30-minute chart. I just started using it about a month ago, and I think it's one of my favorite.
I like the 30-minute for equities as well as the sort of swing trading time frame, because with stocks they open at 9:30. So if you use the 1 hour on stocks, then you have a weird 9:30 hour basically. Obviously the 30-minute works a lot better. And then and then I use basically the time frames I use are 1 minute, 5 minute, 30-minute, 2 hour, daily, weekly, monthly. And I really try to never deviate from that, because otherwise you're just looking at the same chart. Like if you try to combine a 1 hour and a 30-minute. Let's see. My CNBC is 5 minutes delay because it comes through trade Thinkorswim. S&P 500 futures definitely look a lot more bullish. I can just tell by the fact that the NASDAQ came back to all the way to 50% of this morning's move and has just come up to hesitate at the high for the morning, whereas S&P 500 did not pull all the way back to its 50%. It's a little more poking its head above the high there. So if I see a short opportunity, I want it to be in the NASDAQ. If I see a long, I want it to be in the S&P 500. That's been the case for the last couple months, actually.
What the difference is between the YM and the ES and the NQ? as far as retracement for the year.
Well, I mean, they're going to be correlated because they're all made of stocks. Um,
I'm thinking the YM would be at a higher retracement already, where the
well,
NQ is probably going to be the lowest.
I don't tend to use the YM because it's only 30 stocks, and so while it's representative, it's not as diversified as SP 500, and so I have it on my watch list up here, but I don't really use it. I don't trade it ever really, because I can only look at two things, and even then I miss things sometimes. So, um, but yeah, the YM is definitely closer to the all time high than the rest are. In fact, it's already broken above the August high. I bet we
Where
could just look at the. Hmm?
where's the 50% at for that?
Oh, it's already beyond it. But for what retracement it got to, from the COVID low to the all time high, never even pulled back to it.
Okay.
It pulled back to the February of 2020 high
Hmm.
and held there. So it's interesting how you can kind of look at things like that where this did not pull back to the same support that Nasdaq did. It pulled back to its 50% level, and actually it broke below it, and then S&P 500 kissed its, but the Nasdaq, excuse me, the Dow never even came back to it, and now it's much closer relatively to its all-time high. So what I would say
Wow.
is it's got out of those 30 stocks that are in there, I bet if we went through each of them, we would probably find where um, something in there is just really, really bullish. So somebody just asked me, am I doing anything at 18,500 Bitcoin? I think you take some profit if you bought in the FTX debacle. I think that's smart. I don't know if many people. I don't know if many people are trading Bitcoin right now. I think most people are um, stacking Sats, the ones I talk to, and they're never going to sell because, well, then they couldn't be the richest people in the world. Is TV any more on time without delay than YouTube? That's a good question, LJ. Let me look over to mine. I'm gonna I've got it playing on my other screen, so I'm gonna do a touchdown symbol, and let's see how long it takes.
YouTube should be about 7 or 8 seconds delayed.
It's about. It looks like it's about 12 seconds, 12 to 15 seconds delayed, LJ. So wait. Well, if you're gonna try to watch the move, 12 seconds is a long time when the FOMC comes out. So you might want to just look at it on TradingView. I pay for the up-to-date data on TradingView, which is very valuable. It does me very well because I trade it live. So I'll look at the futures on TradingView and trade them on a different platform. Works just fine for me. But as far as like if you're gonna watch it on my screen, you're gonna get like about a 12-second delay. 7 minutes. I'm gonna go get myself a drink. BRB. I'm actually gonna make an afternoon coffee. Let's see if I can get the. I don't think it's gonna come through on Discord, but we'll let that come up. What is the NQ futures trading at front month for you? The month I'm going to be looking at is March 23. That would be the contract I'm going to be trading. I believe if I'm looking on TradingView, that's a good question. Hold on, let me double check that. Let's see. So 1252.75. Yeah, I think I'm very confident that the TradingView one is also the March contract, because I'm looking at it in Thinkorswim right here, where I actually execute my trades. Yep. It's very, very good fidelity between the two, so I trust it.
Welcome to Power Lunch. I'm Kelly Evans along with Dom Chu. Welcome.
It's good to be here.
It's going to be a quite busy
afternoon
here.
Is there a Fed decision today?
There is. We are just about 5 minutes away from the Fed's decision on interest rates, and a half-point hike is widely the expectation. We also get the dots, those projections. They're going to offer us clues on how much further policymakers expect rates to go.
Now, stocks are near recession highs right now, so much for wait and see. The Dow, the S&P, and the NASDAQ, as you can kind of see there, moving higher to the tune of around maybe of 0.5% or so at this stage here. We've got a big Fed panel today. JP Morgan Asset Management's David Kelly, Mona Mahajan with Edward Jones, also John Bellows with Western Asset Management Company, WAMCO as we used to call it back in the day. Thanks everyone for being here as part of this program. Let's start perhaps, Mona Mahajan, with you, with just the expectations that you have from an investment strategy standpoint on whether people need to do anything with their money in the wake of what we're going to get from the Fed today.
Yeah, you know, look, it's a great point. I don't think necessarily we need to move money before or after this Fed
Waiting
meeting.
for the decision any minute.
What we will be watching for, of course, is that dot plot. And really what we're looking for is to see if the markets and the Fed are converging towards the same terminal rate. So right now, markets are expecting this 5.25% terminal rate. If the Fed kind of implicitly blesses that level.
So did I hear you say LJ earlier, right?
LJ, yeah, I spent a lot of time in LJ, Georgia, yeah.
Provide the market a bit of comfort that
Why?
we are closer to the end of
Is
this
he not in this chat room?
Who?
After that, we'll get this
LJ.
pause.
You said somebody.
LJ. I don't know who you're talking about.
I see on. I know him. Tell him to come in. Is he not in here?
I don't know. We got 2 minutes left. So, yeah. All right. We'll see it in the chart, whatever happens.
Yeah, he's in this room.
So, NASDAQ holding there at the high. This little holding at the morning high. Pretty much looking the same. The levels I'm going to be looking for here on the NASDAQ are 12.093, and then the big levels at 12.112. Those are the resistances. ES is much higher, 41.03. So I'd really like to see it pop to that level, overshoot it, and then close back below it for a short. If it's a long, I'm not going to like it as much because you got those overheads, and it's already been going up for the last couple of days. So, yeah, I'm really hoping for a good short opportunity just to be contrarian, because that's where the money's going to be. All right, 45 seconds.
You like shorting more than longing?
I like it more because I'm a contrarian at heart, and it's been going up for the last few weeks and months and days. So I really think the risk reward is better on the short side because you have resistances overhead. They're going to cap your profits if you try to go bullish. But things are getting choppy. That's a shoot to the long downside, and
So you're thinking Nasdaq's about to fall?
it just did.
Okay. It just did.
I'm gonna
I was
wait and
shorting
see.
Bitcoin and it went down now. Yeah.
I'm gonna wait and see what happens. I'm gonna let this 1 minute. That looks like a fake out to the downside so far. Let me see if I can see what the actual rate decision is.
Yeah, was it as expected?
I'm looking. Hold on.
Have you ever studied a trader called Fred McCallan?
Hold on, man. Let's. Okay, it's expected. It's as expected. So nothing really big. I don't think this is going to be sustained. But I don't see a trade yet that I like. See, the problem is you can't really go long because, you know, it basically the market has priced this in, so nothing really happened, and we basically hit a resistance yesterday, and we held it. So I've been thinking, you know, that's basically what this brought it up to. If we had had a surprise, we would have had a much bigger movement. Now what we're doing is we're coming down. We're holding basically today's open. So a little bit anticlimactic, but we'll see what sets up down here. Probably going to have to wait for J Powell to start talking here in about 30 minutes. And what he says might move the market, because last time he gave a little conference, it definitely shot up. All right, what was your question about somebody McAllister?
No. All I did was ask you if you read about a trader named Fred McAllister.
No, I focus
No.
on my own trading. Why? Is there something I could learn from him?
No. Yeah, him. Just good traders. I'll post a book what I'm talking about in a little bit. Okay.
All right, sure.
Yeah,
Post it
no
in
worries.
either Just Chatting or our Everything chat here on the Discord.
For sure. You about to end the live? Are y'all about to end the live?
No, I'm gonna keep going throughout. You know, J Powell talking. See what it comes up to.
Okay, no worries. I'm gonna get a few more people in here. Give me a second.
Okay, cool. Man, that thing's falling. See, now I'm starting to think I want to get along. We're down to basically the bottom from Tuesday. And that's where the Nasdaq's at. If I want to long, I want to look for an ES long. And so we got a few more points before we get down to the Tuesday low. I'm very picky. Answer the question, XVACZQ 2001. What I use to visualize retracements is I use in TradingView the fib retracement. I always try to find like the high. Like what we're going to do here is look for the, now in hindsight, you can see where, I'll talk about it here in a second. So what I do is I do a fib retracement and I just take off the extra ones because I don't use them. I only use the 50% to keep things simple. And so that's what I use to do the 50% retracements. So this little action it did at 158 is interesting, but it did not trigger my spike indicator because I have a buffer at 70%. It basically uses ATR to measure, because what you have here is you have this little break above the high, but it's just very, very tiny. It wasn't significant enough for me to call it something, because if I'd taken it, I would have been mad at myself if it didn't work, because it would have violated my rules. So it only had this deviation from the high was only about 50% of 1 ATR, 56%, and I usually look for 70% or greater. So that could have been a short, but it didn't fit my rules.
You record this, right? Just
Yes.
so I can review it again.
Yeah,
Cool.
yeah. I started earlier talking about the the perspective. Real quick review. I mean, NASDAQ is coming in Tuesday, hitting a resistance. Well, yeah, both NASDAQ and ES are hitting like major 50% retracements. S&P 500 futures from the high down to the all-time high down to the October low. Now, if the daily gets in, it's going to actually spike out of that level. This, you notice how this just popped up on the screen? So what this is doing, again, this is the spike, I was talking about, where you have this high where it pierces the previous high, closes back inside the range, and now what you have it doing is kind of flirting around with the 9-period median, which is the Tinkinson and Ichimoku, but it's really just the defining line that I use to measure when one of these things occurs. It's basically come down not only to get back below the low, and it's going to flash off and on as it does it, but also the halfway point of this move up. So if we can close this day below 47 on the S&P futures, I'm going to say that we have a reversal signal here, just like we had it down here on October the 13th, where it spikes down by breaking that this low right here, breaks that low, comes down, fakes everybody out, closes back inside that range, and we get the move up to here. We may get a spike to the downside now. It depends on where it closes today. So this is a big, big level, actually. Let me mark this up. That is the level for it to hold today. If we close today below that, I'm going to have to say that we're bearish, and we held the resistance for the long term, and that means a lot. That means that we're probably actually towards next few weeks into January, maybe even going to go down, but we got to wait and see where that bar closes. Really hesitating there too. The hike is official, Rich. It's 4.5%, which means mortgages are probably going to go up. Sorry. Let's see. Bitcoin is up 1% on the day, but I think it's running away from that level now. So we did not hit that 18.5 on Bitcoin, and it's going to be correlated with everything else, it seems, and so just missed it. If we can get some more bullish movement. Huh?
I just shorted it like at 18.3.
That's right before. That's fine. I was looking for a kiss of maybe the 18.5, but I mean you're playing up against the lows here for the summer, so it's a good just raw short.
Yeah, I'm already out. This shit went down fast. I don't know.
All right, so now
I watched your live earlier about how you leave your trades open and stuff, and just trying to get better at that. Leaving it for 2-to-1 moves like you do.
Getting better is really kind of operative, isn't it? It's difficult. It's one of those things where if you have a lot of those, if I had only held it on, then
I don't think like
then
that,
this. But here's the thing: you just have to leave something on, and you just have to be okay with having your stop originally where you had it, not break even. I don't like break even stops, because if you bought or you sold it at a level, you did it for a reason, right? And if it comes back, it's just holding that same support resistance. So you just got to take the trade, like 2 contracts maybe, and then cut half of it, and then let the rest ride, and just try to forget about it.
Yeah, most definitely.
If you can.
I understand.
JPAL is going to be at 230. Yeah, Bitcoin not kissing that 18,500 is bearish. Yeah, that it couldn't even get the resistance. All right, so now ES has come down to this level I had marked off, which is the low from Tuesday. Basically, this rally came all the way down. NASDAQ is at that same level I'm interested here to see if we can get a TS recapture. My gut's telling me that we're going to kind of range. And then J-Powell is going to move it within this range, but we're going to have to wait and see. I want to see this red line, which is that Tinkinson, come down and price get back above it, give me a little 50%, and then I should be able to take it up, hopefully for a good risk reward, to at least the middle of this range, if this is the low. I know that probably my buddy Manaconda, he's already buying it down here at 40.26, scalping. So that's a good scalp, but I got my rules. All right, let's see if we're going to get... The risk reward may not be very good on this one. With a little stop below the low right there. We'll see what happens right here.
Maybe the Fed is giving itself some room in case inflation does become more volatile. But I also agree with David that inflation is starting to show signs of rolling over. And there are several leading indicators that we follow that do indicate that inflation will probably continue to move in this downward direction. Interestingly,
I do actually think that inflation is starting to taper off. I think people have already started kind of curtailing their spending habits, hiring freezes, salary freezes. And so the velocity of money is definitely decreasing.
Where do you get that info from?
My gut.
Yeah.
Totally anecdotal. No, I mean, I look at, tech was, of course, the big hit where you had all these layoffs and stuff like that. But, friends in the private sector, they also, it's not broadly, it's not 2008. I remember distinctly 2008 where I was working in IT and we had to do salary freezes and I was busy as hell and it pissed me off. That was one of the reasons I got into finance, was because I was very aggravated that this industry, finance, was what dominated my destiny. I was like, well, maybe I'm doing the wrong thing. All right, so we got, let's see what we got here. So this little reaction off the low right here. See, what I've been waiting for is for price to get above this median line, which, boom, we just had to close above it. The problem is that doesn't give me a very good risk reward. Like, I've got to play it all the way back up to here to get a 3-to-1. Don't like that.
And I believe even if we start to show more dramatically heading towards a recession,
let's see what the NASDAQ is showing. NASDAQ's showing the same thing. So you get your first sign right here of this. The rules I go by is I'm looking for this to give me enough profit to make it worth it. But this is basically just a 1-to-1, like a 50-50. So gonna pass. We'll see if we get any movement when J-Pal starts talking. What one could do with a proper risk reward is take this 50% reaction, and then you'd have to basically play it all the way back up to the prior high, basically to get a good 3-to-1 risk reward ratio. But you may not get that. What I like to do is I like to take multiple contracts, buy it in here, take some profit there, get some out of the market, and then I can leave it, let it run. And that's how I like to start a trade, is make it free, make that contract free. And but I can't do that here, so I'm not going to. I'm very strict. It may very well work, but that's okay.
What's your risk percentage of your total account? So say you have a futures account. What is your percentage that you like to usually trade with per trade?
I usually try to do 0.5%.
0.5%.
Yeah,
Like
I
not
know, it's
even
pretty
1%.
low, isn't it?
Yeah.
Keeps me honest.
Yeah.
Keeps me
Yeah.
comfortable. Lets me go to sleep
True.
at night with an overnight trade if I need to. And sleeping is very important. The thing is, I've found, and I'm sure you can find it anywhere you look, that the optimal trade size is one you don't care about. And 0.5%, who cares? You can make that back the next day, right? I'm not trying to double my account. I'm not.
Yeah.
Especially with futures. Futures can hurt you.
For sure.
I've seen some things in futures, and things that I've either not been in and seen, but it can move very bigly. I mean, you got to understand what you're doing. You're trading, like an order of magnitude of shares. You're taking on leverage with futures, and so you get some kind of a flash crash and your account's gone. That's not good. That's like going all in on poker. Can't play anymore.
But that's why I use the 0.5%, right?
Mm-hmm.
Yep.
You can come back from that.
Yeah. Yeah, I usually do like 5%,
5%?
No, not.
That's a pretty standard
5%.
number. But I've kind of gotten that habit. One of the reasons is because I trade equities and stocks, right? And so I tend to risk 0.5% there as well for swing trades. But you could get some kind of a gap open, right? And there's one in particular that really scared me. This was Sarepta Therapeutics. Okay, so I got into SRPT. This was in 2020. I bought it here, where I've already got it circled, in September 2020. Took some profit here, and then I closed it out here. Now, I didn't know this was going to happen, but they had some kind of drug trial that didn't pan out. I don't know what happened, but you see that overnight, without anything you could have done, you had a 50% drop in the stock. If I had not been trading small, that would have been deadly. And so I was already using that rule, but this was just kind of a validation over the last 2 years of, something like this could have evaporated. As good as 2020 was for going long equity stocks, this could have really taken you back months of profits. So, it's just, I've been doing this for 10 years, man. And
Principles, dude.
It's what's the saying? There's old traders and bold traders, but there's no old bold traders. I have very low risk tolerance now at this point. I'm getting very boomer about it.
Oh no, I'm hearing you.
situation like this, I can put myself in the emotion of being long if I had grabbed it at this level right here, because whenever you get into a trade, you want to just go. Yeah, I trade half my account in every trade, Rich says. Yeah.
Duggan.
So what do you think? You think we're gonna? Let me poll people. When what do you think the Fed is going to top its interest rate out on? I think I know your answer, Black Marble. You there? What do you think, NBA? What do you think? Where do you think the Fed's if inflation is at what is inflation at? What is inflation at? Hold on.
What is inflation at?
7.1%.
7.1%. So what do you think they're going to do?
They're gonna keep raising interest rates.
Up to what point? What number? What do you think they'll raise it up to?
That with the wars and everything going on, you would think America's losing a lot of money with wars, right? But don't they say that's when you make the most?
I don't even know what making and losing money for America means, as much debt as we're in. I mean, we're giving all this aid, but we're running at a deficit and trillions. Was it trillions of dollars in debt? So it's sort of like, who cares if we give $50 billion out? I mean, we already owe orders of magnitude more. I guess it doesn't matter anymore. I don't even know why we still collect taxes. I really don't. We're just going to print what we need. Like, why take my money? Jeez.
Yeah, it's kind of wild.
Well, they
Unless
need to
somebody
take your
to,
money so they can put it in their pocket. They
Yeah,
can't print it and
exactly.
put it in their
They take that
pocket.
money, they take a smaller percent of that money, and that is how people
Somebody
that
needs to run those books.
get paid that tax.
J. Powell, 8 minutes before he graces us with his pleasing baritone voice and lulls us to sleep, saying sweet nothings.
Interest rates about 10 minutes.
Anything else you guys want to look at while we're on here and we're waiting the next couple of minutes? I think we looked at Bitcoin. Bitcoin missed.
What about DXY?
Good question. Let's look at the DXY. So DXY is continuing its course down to 102. That's where I've got pegged. That is, of course, the 50% retracement of the run up that we had since May of 2021. For DXY in particular, what I'm expressing this in is a forex trade with dollar yen, and its low I'm looking for is 127, 128. But yeah, so euro dollar is coming up. Where is it? Let me. I don't have that marked. Most of DXY is going to be euro dollar, and so that's going to be a retracement to 109. But yeah, DXY, it's pretty clear what it's trying to get to. I think it's trying to get down to 102, and it's just pushing down. It's
That looks like a secondary trend, though.
well.
Do you think?
What do you mean, like a secondary trend, as in it's a pullback?
Yeah.
Yeah. What I thought was interesting here, I've been talking about in my live streams on Fridays, is going back to October when we had that inflation print. You know, the dollar index, the value of the U.S. dollar, is still the market pricing things in, and so the market already started pricing in inflation tapering off and interest rate increases tapering off. By the reason I've got this box right here is because this isn't like a Head and Shoulders. This isn't a fancy pattern, but this is one of those things where you see it and let me back it up a little bit. So right about here, like, you had this trend of the dollar coming up, which was completely inexplicable because everyone told us in 2021 that cash was trash. And you start to see this trend kind of starting to roll over, just it's more of a kind of a feel, kind of instinct kind of thing. There's no pattern here, but of course, you saw it happening in dollar yen with a blow off top, but this kind of triggered. Okay, maybe the market's pricing in a change in the dollar, and of course, then it did in fact roll over. But yeah, I think it's pulling back. Probably might find a floor. Maybe even come back to retest the high. So I mean, my assumption, just based on raw price action, is something like this, where we come down maybe into January, and then we do a retest of the high. If we get there or not, I don't know. But you got to wait and see what happens at 102. So that's going to be what I'm watching here. But yeah, dollar's good to look at. I'm actually getting interested in bonds. And before I was going to get on here, before I got talking, one equity trade that I'm in, posted on the Discord when I took it, was this post-earnings trade of MKTX. It's an S&P 500 stock. And what they do is they operate a platform that trades bonds. Again, hashtag disclaimer, not soliciting. But on a technical level, you had this really horrible, brutal downtrend, 50% devaluation in the stock from the highs of 2020, coming all the way off of the highs up at about 600 down to about 220. And you finally got this clearing of the daily cloud. Basically, the trend has changed. Pull back to the 50% here at 255. Didn't show up on TradingView, but on Thinkorswim, I got an alert on a little spike down here. Basically, we're kind of like set. I mean, this is why the 50% are so powerful, and why I use them is because of price action like this, where you have a big trend, it comes down, makes a really, really clear floor, and then flies off of it. And so I was able to pull some profit out of the equity trade when it retested the high. And I really want to hold this, and here's why. This company has been getting hurt because they base their revenue off people trading bonds. Now that you actually have meaningful interest rates over 0%, there's going to be a lot of different bonds that need to be swapped between each other because their valuations are going to change. That's my sort of fundamental thesis of it. But from a technical perspective, this is a company that deals in bonds, makes money from people buying and selling bonds, and they are way, way off their all-time high. And if interest rates stay up as opposed to 0%, then there's going to be a lot more bond trading going on. So that's my thesis on that. But it starts from a technical standpoint. So TLT, it almost tracks TLT. It's almost like buying I don't want to say, it's not really an apples to apples, but it's like people will buy gold miners to express a thesis in gold. That is a company that deals in bonds. And you can see that the stock price is basically very correlated to the movement in bonds, where TLT has started to come up since November the 8th. And that's exactly what's been happening with the company that deals in bonds. So, all right, Jay Powell's about to talk, I think. What do we got? A lot of nothing. This is the same thing that happened to FOMC last month, where we got a big move and it sort of did a little bottom out and then it just kind of died. And then, let me see, what did Jay Powell do last month? What did his talking do? I'm going to run out of time here, but that was November the 5th. November 5th. Can we do a 1 minute real quick on November the 5th? Come on, TradingView, don't let me down. Wait, that's not November the 5th. That was November 2nd. Give me 5 minutes. Yeah, so there's that 2 o'clock. Yes, did the same exact thing where it came down, and there's the FOMC rate decision. Boom, boom, boom. He talked, and it tanked when he talked. He brought the market down. So let's see what happens.
Yep, good call.
It's a really cool story. Thanks, Rich. I appreciate that. I like my cool stories, bro.
The range that we've already seen
Silver.
for the past 2 or 3 months.
Got an alert on silver.
I think what you can see, Dom, is first of all the PCE inflation numbers as people are trying to put them together in advance.
30. Yeah, silver spiked down too. I wonder what gold did. Hang on, let's take a look at gold. Gold. Look at this. Gold actually pulled back. Who was our gold trader in here earlier? So it came down to this 50% level right here from Monday's low up to Tuesday's high, and boom, it's sitting right here at this level. That's why the 50% is so powerful. Pinged it, and then this bar closed right at it. I don't want to take this long, but that looks good.
Immediately takes value out of the market. It's all about how we're getting there and how much longer we have to wait till the end.
And we've just got a couple seconds left. What's the one thing you'd be watching for in the press conference, Mike?
I would say,
yeah,
he's going to say we're not done.
That's a good solid. That looks like a hold, but you'd have a stop below the low on the news announcement right here. So what one could do on this gold right here is
J-Pow's live.
Yeah, CNBC is a little slow coming through trading view or Thinkorswim.
The Fed chair, the Nasdaq's down about 0.8%, as you can see right now. The Dow less than that, interestingly, down about 0.4%. And crude.
Let's see what happens. Remember that hypothetical trade where I did not want to go long here because I couldn't get back up to here. Yeah, I'm glad. I would be annoyed.
And what we have right now, you can see right there on your screen, Fed Chair Jay Powell approaching the podium right now, so we'll take you to his comments live right now.
Good afternoon. Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by a half percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9%.
Like Marble, didn't you say that you thought that was it mortgage rates or interest rates were going to have to come up to 10% to get inflation under control?
Spending and production this quarter.
Minimum, I'd say mortgage rates, but interest rates probably go quite a bit higher than where they are now.
Disposable income.
But I mean, I think the minimum is 10%.
For mortgages?
Or a peak for mortgage, yeah, 30-year fixed.
Largely reflecting higher mortgage rates.
I think we could do a little more inflation.
Interest rates and slower output growth also appear to be weighing on business fixed investment.
And that is why,
As shown in our
yep,
summary
there we go.
economic
So we just
projections,
broke
the
that low.
median projection for
That
real
is
GDP
why
growth
I have
stands at
rules.
just
Because this was
0.5%
not a
this
good
year,
risk reward trade
well
to
below
get
the
to
median
here.
estimate of the longer run normal growth rate.
I think I was looking at
Despite
gold.
the slowdown in growth, the labor
See
market
if gold
remains
breaks it
extremely
too.
tight, with the unemployment rate near a 50-year low. Job vacancies still very high, and wage growth elevated.
Bitcoin's coming off as well,
Job
breaking
gains
its
have been
low.
robust, with employment rising by an average of 272,000 jobs per month over the last 3 months.
What I would like to have
Although job
seen was
vacancies
a
have moved
pullback
below
to
their
here
highs,
and an
the pace of job
opportunity.
gains have slowed from earlier in the year.
But this
The labor market continues to be
probably would have had to just get
with
in
demand substantially
there.
exceeding the supply of available workers.
But at least I'm not long.
The labor force participation rate is little changed since the beginning of the year.
Where's the next support?
FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has contributed to upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.6% this year and falls 3.1% next year, 2.5% in 2024, and 2.1% in 2025.
How often do I open positions? When I see opportunity that fits my rules. As I was going through earlier here, what I wanted to do was I wanted to get long off this, like this reaction right here, but I did not do that trade because the risk reward would have only been about 1.75 to 1. Risk 1, make 1.75. So that's a no-go. And so by just risk reward, I said no to a potential loss. So if I don't see something that fits my rules, I don't take it. Last week, I did not have a trade, but the week before it, I had 3. They were winners. So I would say that I average 1 to 2 a week, but some weeks there's more than others.
The risks that high inflation poses to both sides of our mandate.
I'm very picky.
And we are strongly committed to returning inflation to our 2% objective.
Some people scalp.
At today's meeting, the committee raised the
If you have a
target
very
range
good
for
emotional
federal
control,
funds
you can
rate
scalp.
by a 0.5 percentage point.
I don't scalp.
Bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates.
Your
by
video
4.25
stream is like a minute
percentage
behind
points this year.
YouTube.
We continue to anticipate that
Which
ongoing
one?
Increases in the target range for
JPAL.
Yes, because what it is it's coming through Thinkorswim, which is at least like 5 minutes. Well, actually, it's actually a full minute, yeah. And that's just because I don't have the desire or really impetus to get CNBC, because I'm only going to use it for this, just to kind of have some background noise. I could probably. How are you watching CNBC? Are you watching like on cable?
YouTube, the Fed's channel. It's
The what
live.
channel?
The Fed has a channel on YouTube.
You know what? I learned something new. Screw that. Fed channel? What's it called?
Federal Reserve.
That would make a lot of sense. Is the actual Federal Reserve official
Yup.
channel? It doesn't have it has a check mark. Okay. It has a gray check mark. I was looking for a blue one.
and to keep longer-term inflation expectations well anchored.
Of course, it's YouTube. If you don't have premium, they might shove an ad in there. I don't know.
Period of below-trend growth
Yeah.
and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
Well, it looks like his talk just gave up the low, and this is why being a contrarian is good, because let's see what all happened. So again, coming into this, the start, I was looking at what we did on Tuesday, which is we came up and pegged this major resistance. It's the 50% from the all-time high down to the October low. Closed back inside this range from November, and that's very bearish signal. Then we had basically a big run up for the last few weeks. Could not quite get up to that high. Yeah, and so I think now if we close below 47, which is looking like it today, that's going to be a bearish signal. I have to assume, unless we break Tuesday's high now, Tuesday's high is going to be really important. So essentially, I don't want to misspeak. What was it? The CPI of October defined the low, and the CPI for December looks to define the high. So yeah, the high, basically the low of October is market go FUD, and the high of Tuesday is market go boom. So that's going to be the rest of the year and into probably quarter one, really and truly. Those are the two key levels. And what we do in between there is going to be interesting. VIX is still above 20, so I'm looking forward to... okay, this is interesting actually on VIX. So one of the things on VIX that I've been looking at is 20 has been a pretty consistent support for VIX, and the VIX and the S&P 500 operate inversely. And so when you have one second, let me get these lined up. So what you can usually find is when the VIX hits a key level, you get a reaction in the stock market. It's the tail. Basically, the VIX is the volatility. Oh, wait. VIX up top, S&P, SPY down at the bottom. So the VIX is the implied volatility of, the average implied volatility of 30 days to expiration options of the SPY. So it's really kind of a derivative of SPY. So it's the tail. But what I find very interesting is that the tail sometimes wags the dog, where if we look at the low of August, when VIX was hitting that 20 level that it had established back in March. So in March, let's start from there. So in March, you had the VIX bottom out around 20, and that was the high of March. Boom. Let's get them exactly right. Boom. So you go up on the VIX as the market goes down, because as the market goes down, fear increases, implied volatility goes up, people buy protection. That's why options are more priced, higher priced. And then you come back down to that same low on the VIX here, boom. And where is that on the market? That's right where it topped out in August. So now, what do you have happening? You're back down at this level once again on the VIX, bottomed out on December 2nd. There is where you have the market right now. And so now what you have is VIX going up, people buying more protection, more fear coming in, so to speak. And you even now have a little trend on the VIX, which is just held at 22. Obviously, this news couldn't break it. So what I assume, just based on this price action, is VIX is going to increase, which implies that we are going to get a down move. So we got that resistance on the stock market. We got the support on the VIX. I have to go based on the thesis that we're going to go down. To where? Can't say that yet, but that's going to be what I'm looking for. I'm looking bearish now, going into the end of the year. And people can say it's people, tax loss harvesting, rebalancing, whatever. But just from a technical standpoint, that's my read. And now we have a defined trade. Let me not violate my rules here. It needs to close. So let me clean this up a little bit. On the daily here, if you were to take this as a trade, let's say you take a leap option, or you wouldn't really need a leap, maybe out to March puts, or maybe even to the summer if you want to give a little more time, probably March. You would basically say, okay, there's my entry point. My stop is 4,200. If we break 4,200, and then you're basically playing a retest of the October low. And so there's your 3-to-1 trade on the daily of this S&P 500, however you want to express that. So, but if we do break this Tuesday high, you have to assume that the market's going up. And all this FUD was for nothing. But for right now, that's my read. Anybody else got something to talk about? Because I don't think we're going to get much, honestly, beyond this. I think what's happened. You got to wait for the day to close. What's the channel name, Alex? On what do you mean the channel? I have a YouTube channel. It's called Norox Notepad. And you can find the link probably down below on TradingView here. That's where I keep archive of everything, but I also stream on... okay, sorry. Federal Reserve. Do a search for YouTube for Federal Reserve. It was the top one that came up. But yeah, I'll go ahead and give a plug. So I do have a Discord. I don't charge for it. I just want to hang out with people and share ideas. So come join.
Based on what J Powell just said, he their target is still 5%.
Wait, inflation or interest rate?
Interest rate.
Okay.
And that means they're at 4.25% now, so they're expecting...
You mean 4.5?
No, they're at 4.25. Because this was a 0.5 versus 0.75.
It's a point. It went from 4 to 4.5. So where did you get the 4.25?
And that's what I thought they said. He said they raised it 4.25 this year. So I guess it was at 0.25.
Oh yeah, it was at 0.25. Yeah.
Sorry, might be. So I guess I would put it at 5.25 because they said that they had forecast another 75 basis point increase from where they're at now, and in 2020 or 2023. That's what they think is going to happen. I think that's a bit optimistic.
All right, let's see. So this committee seeks to achieve maximum employment, whatever that means, an inflation rate at 2%. The committee decided to raise the target range to 4.25% to 4.5%.
No, that's the current target range.
Target range for the federal fund rate.
Yeah, that's the current rate.
Okay.
But I mean, they also have where they think the eventual cap's going to be is what they were talking about.
The cap is going to be at 5.25. Well, then the market's probably priced that in.
Yeah, well, I'm saying that's what they're pricing in now currently, but I think that's optimistic.
You think they'll keep going higher?
I think they're going to have to. I don't think we've reached a point yet because I don't think historically speaking 4.5 is horrifically restrictive.
It's horrifically restrictive if you own tech stocks and cryptocurrency.
I wouldn't say so.
Well, excuse me, if you got into these things in the last 2 years.
Well, the bigger thing isn't the stock market. The bigger thing is what's happening in employment.
Yes.
And if you saw the numbers for employment this month, they were pretty hot.
Let's see. Unemployment was earlier. Wait, that was the jobs report from December the 1st, right? December 2nd. So, yeah. See, the market forecasted that the unemployment would go down finally, but it did go down a little bit, but yeah, not as what the market thought. And the unemployment rate stayed steady at 3.7%, which is pretty low, on the low side.
Historically, very, very low.
Yeah.
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 Also, the 7.1%, if you look at the breakdown, it was largely due to falling gas prices.
Where'd you find that breakdown?
I don't know, actually. I haven't looked at it, but if you look at gas prices, they've gone way down the last month. So that tells me if it only dropped a single percentage point, a lot of it was attributable to that. I've seen the breakdown before. Let me see if I can find it again.
It's funny that Kramer's face comes up. He's kind of a joke now, isn't he?
Yes.
He is so consistently wrong. I had a realization this week about market personalities. Jim Cramer and Paul Krugman come to mind. They've had long careers of being wrong, and they've not been held. No one really holds them accountable because they're the experts, because they present their opinions with confidence. They have the answer, whereas most people don't have the answer. So it really doesn't matter what you say as long as how you say it is confident.
Well, it's because they're the ones who are willing to go up there and say it, even though they might be wrong.
Yes. That has been something I've tried. I'm always trying to seek truth. And I want to continue seeking truth. I'm just going to say what I think. I'm not even going to say what I think. I'm going to say how it is. I've learned from Jim Cramer.
Dude was lying. Should have pushed up.
Do what?
Sorry. I didn't mean to say that.
It's okay, man. This is freedom of speech. All right. Well, it's coming up on 3 o'clock. Thanks for hanging out with me, guys. I'm going to get something to eat. I'm out of pomegranates. I got to get them before they go out of season. So I'm going to end the stream here. Thanks again.
Hey, man. Appreciate it, though.
Yeah, join me. Thanks for coming in, talking on Discord. And yeah, I hang out every Friday. Try to join me on my Friday live stream and talk to me then. So
For sure. All right, man.
All right, see you guys later.
Later.